Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we got a special chart for you. It's going to tell us whether or not we're going into a recession and if the bond market is going to collapse. This is pretty serious stuff, so let's dive right in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey Bob, so we're kind of seeing a lot of weakness across the board here in the markets. You know, the AI bubble looks like it's really topped out here, but you found an interesting chart with regards to, and I actually thought this was interesting, in regards to copper and gold.
Yeah, and when Phil meant the bond market collapse, he's talking about yields collapsing. And before everybody gets excited about yields collapsing, I'll refer you to the 72 other charts that we've shown in other podcasts saying falling yields means recession and falling stock market. And so this chart here is really, really fascinating. And also we're looking at the copper gold ratio versus the 10-year yield. And they have a high correlation with each other. And basically, you know, when copper is outperforming gold, it's usually in an environment where you're starting to see the interest rates rising. And that's what we've seen here. But a funny thing happened when we got into, end of 2022, the yields kept rising and the copper gold ratio started to falter, and these things will snap back with each other. And these are the things that Phil and I look for all the time. We look for things that are in correlation that are no longer in correlation, and then you have to ask yourself, well, who's going to win in the alligator snapback? You know, these are called alligator jaw charts for a reason. The jaws will snap shut, and we don't know if it's going to snap down or if it's going to snap up. But the way China went into deflation, Phil, during your couple days off, China reported their first deflationary print.
Yes,
And copper and China are, people don't realize they don't do gold and silver there for collateral. They use copper, and you know, they have warehouses full of copper, you know, for people to pledge when they're borrowing to do whatever their business that they're doing. And so if copper can't maintain a bid, okay, and we're slightly inflationary with gold getting a bid, and you have the 10-year that I think everybody is probably agreeing that it's not reflecting reality of the economic picture, but we know why Powell's doing it. I think we're going to probably see a snap down hard in the 10-year here over the next 12 to 18 months, Phil.
Yeah, and you know, when you start going into recession too, right, the bonds, you kind of see that move into bonds, right? So buying bonds lowers the yield. And then if you're thinking, well, isn't the yield curve supposed to correct? Well, the 10-year yield can drop and still be on a corrective path toward normalizing up toward that 2+% because the short end drops even further. So it just means there's going to be a big shift into the bonds, and usually that's your safety trade as things get unstable going into something like a recession. So yeah, I would agree that odds are that the orange line snaps back down to copper and gold in this situation.
Yeah, and so this is not just like, it's not a next week deal. We're trying to get you guys oriented towards what we think is going to happen. Remember, we talked about TLT, TBT. TBT had a breakout again. It still has another $1 or $2 to go, and I think it's going to probably maintain strength probably through the next FOMC meeting, and then that's probably when I'm going to pivot back strong into TLT, and I'll probably be taking and hedging my energy positions, if not outright selling some of them going into the what I call the energy shoulder season, because then the makeup for this market's going to be more purely defensive and recessionary. And so you're going to be long bonds, probably long some healthcare, utilities, and you absolutely do not want to be in the tech. Tech's getting wrecked right now. And so with this AI thing blowing up, Phil, next week or the 14th, yeah, that's next week. I think 14th, 15th is when NVIDIA reports. But look, we already had the Taiwan Semiconductor saying, hey, we're not making many chips. We got an end user, SMCI, that said we're not selling as many chips going forward, system, what their blades that these AI chips go into, and they got eviscerated, down $80, down 26 or 27% in one day. And that's purely bubble mania. And so I fully expect NVIDIA to get its head handed to it next week. It's going to be hard for people. I know I saw some things in the chat. You got to be really careful how you trade NVIDIA, because you're going to have the put options are going to probably be blown out for this trade. The best way to trade these is you got to wait for the secondary dead cat bounce, and then you're going to be able to get your put options cheaper for the second roll down, which would be even a bigger move. So as you guys contemplate that, NVIDIA, especially if they push NVIDIA up into the earnings next week like they did SMCI, then you're going to see them wiped out. SMCI lost like 6 weeks worth of value. So I think the whole market's losing all of July, Phil.
Oh, I think it's totally possible. And I think, August, I think is going to be, we may have some tailwind into OPEX next week, but I think post that, it's going to be hard for this market to stay afloat. And then I think what we're seeing too on this chart with the divergence is because, as we were talking about prior, that, I think the market front ran the bonds as far as shorting them, because we know Yellen has she's putting down a ton more debt issuance, and everything's very, very sensitive to the duration of the issuance. This time it's going to be more of the longer dated stuff, the 10-year and such. Prior to that, it was all on the short end, like 12 months, that type of thing, or shorter. And so the market really likes that and gobbles that up. It's pretty liquid. But the long stuff being issued is a problem for this market. And I think the bond traders got ahead of what's coming and shorted this. But once, there's going to be a normalization and a snapback. And I think that's why we saw this divergence here recently, is because once that came out, you really saw the yield spike once that issuance schedule came out. And so I think they were just getting ahead of that heavy issuance, selling off bonds. But now, once that's out of the way, I think it sets everything up to a classic recessionary environment, Bob. And I think everything that we've been kind of warning about in the second half of the year really starts to accelerate in the Q4, because there's no getting around that. That's the same environment we were in the Q1 into Q2 of 2022, and that was not a good time for the market. Very volatile, big drops, and I think that's a similar environment that we're heading into.
Yeah, no, I agree. And just to FYI, we pulled this chart from Tier 1 Alpha. I received information from them daily. They're a good site to check out. I don't use them professionally, but we do. They do provide free information out there, and I take advantage of it. We use other option providers, so didn't need a third one. But anyway, Tier 1 Alpha, thank you for letting us use this chart and check them out. And with that, Phil, that's all I got. We got some interesting stuff coming up the rest of the week. The market's definitely getting interesting, and I think you're going to start seeing what we call a snapback to reality here. And with Apple blowing up, AI blowing up, there's no way this market can hold itself, because those were really the last legs keeping this thing from correcting down. And I think we have huge order blocks, Phil. Correct me if I'm wrong. We have huge order blocks now, looking at 4,400 on ES, and we broke the volatility trigger. So the market's in bear magnet mode versus bull magnet mode at the moment.
Yep, we have the weekly 9 EMA at like 4570 or 4472-ish and something like that. That's an important level. If we start slipping below that, then yep, 4400 is a gigantic magnet, and I think that's our max downside ahead of OPEX. So I think short term, that's what we're looking at. And then after OPEX, if we lose that, watch out below.
With that, Phil, hey, thanks. I'm glad you're feeling better. And guys, hit like, hit subscribe, hit notification. Those of you that joining our service, thank you. And give us feedback in the rooms. We want to make sure you get the best out of it. And those who haven't joined, definitely check us out. TradeLikeAGenius.com. We got great products, great services, and I think we really can help you get ahead of what we think is going to be happening here in the future. So with that, see you guys tomorrow.
Trade Genius.